Hey, this video is going to be all about chart patterns. A chart pattern in trading is a visual representation of price movements in a security over a certain period of time. Patterns can help traders identify potential opportunities and risks in a market. Chart patterns can be used to predict future price movements, identify support and resistance levels, and confirm trends. Some popular chart patterns include head and shoulders, double tops, double bottoms, flags, and pennants. And if you want to know how to spot them and learn more about this topic, stay tuned. Let's talk about basic chart patterns. Basically, there are three groups of chart patterns: continuation chart patterns, reversal chart patterns, and bilateral chart patterns. Right? Continuation chart patterns occur when the price is continuing the same direction as the trend. Reversal patterns occur when the price is changing direction and the trend is reversing. And bilateral patterns can occur when price goes in either direction and indicate a period of consolidation. Let's have a look at the most common continuation chart patterns. As mentioned before, continuation chart patterns are an indicator for a trend continuation. So we have the trend here and we insert basically the continuation chart pattern here and the trend continues. First up, we have the ascending triangle in an uptrend. Here we are coming from an uptrend. We get rejection here at this price level and coming down, making higher lows, but not higher highs, right? And eventually break through and continue with our uptrend here. The same here with the ascending triangle in a downtrend. We have this downwards movement, got the rejection here at this price level and making higher lows, but got rejected here. And eventually breaking through this area and continue our downtrend. Next is the descending triangle in an uptrend. Here again, we are making, we got rejections at these price levels and making lower highs, but not lower lows, and breaking through this price area and continue with the uptrend. The descending triangle here in a downtrend, the same. We're making lower highs and having here this support area, but are breaking through and continuing with the downtrend. Here the ascending channel, again here coming from a downtrend, having rejections here in this channel in between those two price levels, which are forming a channel. This is an area of consolidation before breaking down and continuing with this downtrend. And the opposite for the descending channel here, coming from an uptrend, rejections here at the top and at the bottom, forming this channel and having this consolidation phase where we eventually break out and continue with our uptrend. Here the horizontal channel, again coming from an uptrend, consolidation phase, forming a channel and continuing with the uptrend. The same here, but only coming from a downtrend, rejection here at this price level, rejection here, forming a channel and eventually continuing the bearish movement. Here we have the symmetrical triangle. Again here, consolidation phase coming from an uptrend with the continuation. And here from a downtrend, consolidation, making lower highs, higher lows, hence the symmetrical triangle, and breaking out to the downside here. Now let's have a look at the reversal chart patterns. It's, as the name suggests, a pattern that indicates a trend reversal. Here we have the trend. We insert the reversal pattern here, and the trend reverses like magic. One of the most common ones would be the double bottom. Here we are coming from a downtrend, get a rejection at this price level, coming back up, coming back down, get another rejection, are failing to make a lower low, and once we break this neckline here, the trend reversal is confirmed. Here the opposite with the double top. We are coming from an uptrend, get a rejection at this price level here, coming back down, another rejection here, fail to make a higher high, and once we cross this neckline here to the downside, the trend reversal is confirmed. The triple bottom, basically the same, but with an additional rejection. Instead of 2, we have 1, 2, 3 rejections here. Coming from a downtrend, we got a rejection, going up, another rejection, going up, another rejection, failed 2 times to make a lower low, and once we break this neckline to the upside, the trend reversal is confirmed. Same here, but the opposite, the triple top. We're coming from an uptrend, getting a rejection here, coming back down, another rejection here, coming down, a third rejection. In both cases, we haven't made a higher high, coming back down in price, are breaking this neckline here, this price level, and confirming the trend reversal. The head and shoulders, here we coming from an uptrend, get a rejection here at this price level, are making a higher high, which is a bullish signal, but then coming back down to the same price level here and building a neckline, we are not making a higher low, which is a bearish sign. We get a rejection and are failing to make a higher high, and once we are breaking this neckline here to the downside, the trend reversal is confirmed. The inverse head and shoulders pattern is the opposite. And in this case, we are coming from a downtrend, getting a rejection at this price level, and here as well, making a lower low, which is a bearish sign, but then getting a strong rejection at this price point here, coming back to the same price level of the previous rejection and building a neckline. Here we are failing to make a lower low, and once we are breaking this neckline here to the upside, right, we have a trend reversal confirmation. Next, we have the bilateral chart patterns. And in this case, we have a trend, and this bilateral pattern can indicate both trend continuation or a trend reversal, depending on the situation. Let's have a look at those patterns. One bilateral pattern would be the symmetrical triangle. Here in an uptrend, coming from an uptrend, we have this consolidation phase, and the most likely outcome is if you're coming from an uptrend that the breakout would be to the upside, but it could go also to the downside. Here in a downtrend, the exact same thing. The most probable thing would be a breakout to the downside and continuing with the trend, but it could go also the other way to the upside. The ascending triangle is another bilateral chart pattern. Here coming from an uptrend, consolidation phase, most likely continuing, but it could go also down in the other direction. The ascending triangle in a downtrend, the same consolidation, breakout to the downside most likely, but then again, we could go also to the other side. Descending triangle, exactly the same, right? It could go both directions, but the most likely one is continuing with the trend. So now we are back on the USD Japanese yen monthly chart, right? And let's see if we can find some of those patterns in this chart here. First, let's zoom out. Again, we are here at the monthly level, and let's see if we find some obvious patterns here. If we start here at the left, I think that could be an upwards channel, right? Let's draw a line here. This is the upper trend line, and here we have the lower one. So here, coming from a downtrend, we got a rejection below this line and went up and had here several rejections at this top line here, at this price levels. We went up and finally broke to the downside, as we can see here, in an upwards channel pattern that breaks through the downside. Let's see if there's something else. Maybe we could draw something here, right? This could be an ascending triangle, right? Getting rejections here, here, yeah, and having this consolidation phase and breaking down here, going into this pattern. Right, let's see. So we have an ascending triangle, a channel formation here. So this could be a symmetrical triangle here, right? More or less, which is also here in this case a confirmation pattern, and as it broke here to the downside. Here this could be a descending triangle. Right, as we have lower highs and this resistance level here, right, where we finally broke to the downside. Then again here, another triangle pattern. And this is the monthly. As I mentioned, those chart patterns can be found on any time frame, whether that be the monthly, weekly, daily, hourly, 15-minute, 5-minute chart, it doesn't matter. But let's have a look at the weekly chart, or better, even let's go to the daily chart, and we can see already that we have some patterns here. Yeah, let's zoom out a bit. Well, we have here, for example, we have an uptrend, right? This is here a general uptrend, and this would be a falling channel or falling wedge, depending. Right, we could draw this in and this here in, right? It would be some kind of falling wedge. We can zoom in and even go down to the 4-hourly, to the intra-day frame. Take this here, it up around here. So we see, coming from an uptrend, we had this falling wedge, or this downward channel, which eventually here broke to the upside and acted as a confirmation pattern. So after all these wedges and triangles and channels, let's see if we can find trend reversal pattern like a double bottom or a head and shoulders. Let's see if we can find this here. We're on the monthly. Not sure if that's a double bottom. Maybe let's go to the weekly. or even daily. And I think that looks like one. Let me zoom in a bit. Well, not quite sure, but let's try it. If we draw in an area here, right? So we would come here from this downtrend, right? Would hit here, bottom, come up, come down, up, and once we break this neckline here, we confirm the trend reversal, right? I think that's a double bottom and that's a trend reversal pattern. So now we are again at the USD yen pair, and I think this looks very much like a triple bottom. Let's have a look. Let's take the rectangle tool, and I think, yeah, that looks like the bottom. So we do have here, if we take the brush, we are coming from a downtrend, right? Have a rejection here, coming back up, coming down, another rejection here, coming back up, another rejection here at the bottom. We will have, well, like this would be the neckline, right? And we broke out here, pulled back, went back up, pulled back down. Probably when we passed this point here, we would have the confirmation of a trend reversal, right? So either here by breaking this neckline, or here by breaking this higher high. I was looking for a head and shoulders pattern, but I had difficulties in finding one. So I went down to the 5-minute charts, well, at least at the USD yen pair, right? So I went down to the 5-minute chart, and I think I found one. It's either I'm really bad at spotting those, or I don't know. So let me know if you can spot some of those head and shoulder patterns in the USD yen pair, and let me know down in the comments below. And I think this one is a head and shoulders pattern, because we do have here, I think that would be here, the left shoulder, the head, right, the right shoulder. So this here would be the neckline. And once we broke that neckline, the trend reversal was confirmed. In this case here, well, to the downside.